Good afternoon, ladies and gentlemen. Welcome to an investor briefing for Mayberry Jamaican Equities. With me today, I have our Chairman Christopher Berry of Mayberry Jamaican Equities on my left. Welcome, Chairman.
Yes.
And on my right, I have our asset manager from Mayberry Asset Management, Mr. Gary Peart. Welcome, Gary.
Thank you, Don. Good afternoon.
Apologies for the delay in starting, folks, but we wanted to have you folks join us live for us to present the MJE results for the year ended December 31st, 2021, which was just uploaded to the stock exchange today. So you're getting it live and direct. So without further ado, of course, you know I'm Dan Theok. For today's meeting, I'm an investment analyst. I work at Mayberry Investment Limited, a related party to Mayberry Jamaican Equity. And I'll be performing and conducting today's proceedings. Thanks for all being with us. Jumping straight into it, I'd like to show you on the very next slide highlights of the performance for the year and that just was. So jumping right into it, I think you're already seeing the slide. There is a 20% increase in the total assets, jumping to 119.6 million US dollars, or for those of you like me who prefer to hear Jamaican, 18.4 billion Jamaican dollars. We also saw a 16% increase in shareholders' equity, 14% increase in the NAV up to 8 cents or $12.40 Jamaican, and 130% increase in the total comprehensive income. And so we're moving on to the details of the profit and loss performance for 2021. Again, everyone knows in 2020 we had a rough year, deep into the pandemic, and the company actually had a $28.6 million loss as the portfolio lost values. What we've seen is a very strong rebound in 2021, resulting in a $16.9 million gain in investments going through fair value adjustment through the P&L, and the final net profit of 16.45 million US dollars or 2.4 billion Jamaican dollars. Moving on to the next slide. We want to show you a little bit about the increase in total assets, that 20% jump to 119.6 million US dollars or 18.4 billion Jamaican dollars. And what I really like about MJE, speaking as an analyst, is they've got $18.4 billion in assets and only approximately $3.3 billion in debt, or 22.37 million, as you're seeing there on the slide. So as we go on a little later today, I will certainly be asking Mr. Bear a little bit about his investment strategy and why he operates with only 22% leverage. Very little leverage, $97 million in equity for folks, 8 cents US NAV, or net book value per share, which is approximately 12.4 Jamaican dollars. And in next slides, as we go on, I'll be showing you how the share price has traded relative to the stock price. On the very next slide, we just want to focus on the top 10 performers in the MJE portfolio that helped drive that $2.4 billion gain that we just saw. And I just want to focus on 3 in particular, first being CPJ. CPJ, we watched that stock go from $2.58 to $13 last year. That's a 405% increase. And it's one of these companies that MJE has long been associated with. CPJ is a great company run by Tom Tyler and Mark Hart, and we like what they're doing out there. $13 was the stock price at December 2021. Today, that's closer to $15, and I'm expecting continued greater things from CPJ. Next good one, GK, Grace Kennedy. That's up 60%. We watched that stock price go from $62, $68 to $100. And again, we're expecting to see GK continuing to do well. They weren't particularly troubled by the pandemic, but we do expect them to grow even further as we come out of the pandemic. And last up I'd like to look at is Supreme Ventures Limited. That's one where we saw a 1% growth last year from $17.61 to $17.79. That stock today is up to $19. So what am I saying? Although the December 2021 results were great, folks, I'm expecting even bigger things come Q1 for MJE. Moving on to the next slide. This gives you a feel for the top 10 stocks in the MJE portfolio. And we can see here at December 2021, Supreme Ventures Limited makes up approximately 50% of the portfolio. We see where CPJ makes up approximately 15.9% of the portfolio, coming from only 4.5% a year ago, and that has a lot to do with how that stock price has rebounded very well. And we see where GK makes up about 4.8% of the portfolio. So it's a nice combination of stocks. All here that I really like, some that have not done as well as we originally expected. Wigton is one such example, but again, we're expecting bigger and better things for these companies as they go forward. And I have to declare interest. I happen to be a board director of Wigton Wind Farm. Next slide. This gives you a feel for the performance change in the NAV pictorially. And again, that's 8 cents US per share, or approximately $12.46 Jamaican. Next slide. This gives a feel for the comparison of the stock price versus the NAV. And you can see here, it's not unusual, strange to me, that the stock has been trading below its NAV, sometimes by as much as 30%.
That slide isn't showing.
So the MJE NAV versus the MJE share price. And,
on YouTube.
And what you're seeing here, folks, is the comparison between the NAV of $12.46 and where the stock price closed at the year end of $9.01. Next slide shows a graph, and this is the one I really like to see. And I'll never forget when Gary explained that whenever you see the red line, which is the stock price, below the NAV, which is the net asset value, that it means it's a good time to buy the stock. And you've seen here generally how there's been a 20 to sometimes 25% spread between the NAV, the value of all of the equity portfolio, divided by the total equities in MJE. There's no logical reason, folks, why the stock price should be trading at a 20 to 25% discount to the NAV. It, in my humble opinion, means that folks aren't truly appreciating the value of the portfolio. But I do think as the market matures and people have a better understanding for the NAV stocks, that we will see the stock price growing closer to the NAV. And I'm also going to predict that you're going to see the NAV continuing to grow over time. Just to recap, great turnaround in the performance of MJE in 2021, and I expect bigger and better things in 2022 as we see the economy freeing up coming out of the pandemic. And what I'd like to do is have a conversation with these two goodly gentlemen to discuss a little bit about last year's performance, a little bit about what we expect going forward, a little bit about how we feel about the overall economy and what's happening, and hopefully we'll get to pick their brains a little bit about why they've chosen the types of stocks they've chosen. First question for me goes to you, Mr. Berry. CPJ, we've seen this go from 4% to now 14% of the portfolio. How are you feeling about CPJ, their performance? We've watched that stock go from $2.58 to $14. Some might be wondering, time to sell? How do you feel about CPJ? Is this going to be in your portfolio a year from now?
Well, how we ended up owning CPJ is our research department did a slide. We're looking for industries that consistently grow over time. This was many, many years ago. And what we discovered was that the tourism and hospitality industry in Jamaica is a consistent grower over the last 25 years. Through thick and thin, they always find a way to grow. Sometimes they get some minor setbacks. 2020 was a great example, and 2021. But already from the trade, we're hearing from the hoteliers that they expect to exceed 2019 numbers. Some of them already, some of them definitely by this summer. So we're seeing a great rebound in tourism. And the problem is when you sell a great stock in a great industry, you end up with a lot of cash, and then you have to find something to put it back in. So, I'm not one for working when I don't have to work.
Excellent. Thanks for that. And it's one thing to say the stock price moved from $2.58 to $14. It's another thing to say that they turned a $5.5 million profit for their half year. They checked the $5.5 million profit for their half year. despite challenges throughout the pandemic, with tourism numbers not reaching to its peak, we're expecting at least $9-10 million profit for the full year, and greater beyond, as Jamaica has not yet gotten to the level of tourist arrivals that they had before. So that's CPJ, great stock pick, Mr. Berry. It's one I really believe in. I think it's going to continue to do exceptionally well, and I expect bigger and better things from CPJ. We have to declare interest, I believe. Mr. Berry and possibly Mr. Parrott are directors of CPJ. Next one for me, Mr. Parrott, Supreme Ventures Limited. You know, it makes up 50% of the MJE portfolio. I suspect you and Mr. Berry had something to do with that. I presume it must be deliberate, and it must be why I don't see you very often these days. You seem to be wearing a executive chairman role over at Supreme Ventures. I presume that's because of how important a role it is to MJE. Tell us a little bit about SVL. That stock closed the year at $17. Today is at $19. I mean, can this stock really go much further? What are you doing over there? You know, how are you feeling about SVL? We're coming out of the pandemic. You know, you're obviously within the rules of the JSC. What can you tell us about SVL and the concentration risk, so to speak, that MJE has in relation to it?
Well, thank you, Dan. Just a couple corrections. I don't sit on the board of CPJ.
Okay.
It's Chris and the Vice Chairman, Mark Berry, that sits on the board of CPJ. As it pertains to SVL, yes, I'm the executive chairman, so I chair the board, and I'm in charge of the management team. The most important aspect of SVL in the portfolio is the dividend. So you will find that SVL represents more than 80% of the dividend that MJE earns. And that comes from SVL's dividend policy to pay out 90% of their audited profit. So each quarter they pay 90% of dividends. And what that does, it allows MJE to manage its operations, and also once you've covered expenses, it leaves cash that will allow for a smaller dividend. Last year we paid a dividend. And so that's one of the key aspects of it. In terms of the business, I think SVL right now probably has the potential to be one of the best performing businesses in this hemisphere. And when we look on the last 2 years impacted by COVID, 2020, 2021, where for almost a month we were actually closed. So the company has come through that. The curfews has had a big impact on the business, and I think 2021, now that we have moved past the controls, the curfews, etc., you're likely to see, I think I'd use the explanation once, you have a coiled spring.
Yeah.
So what you have is that the spring has been depressed. I think this is the year for SVL spring to pop out, and we'll see what will happen.
Excellent. I have no doubt. And tell me a little bit about K-Manners. So K-Manners in particular, I would think, was challenged throughout the pandemic. And
Well, there were. And, again, I have to take my hat off to Chairman Solomon Sharp and the General Manager, Lorna Gooden. And, when Solomon came, we sat and we devised a strategy primarily, to drive the revenues of K-Manners. Again, K-Manners has been impacted by the curfews, and we were on a nice growth trajectory, and, the curfews came and the lockdowns came. And I think we're going to be very surprised by K-Manners this year, because we believe that we've cracked the code there, and we're going to see bigger and better things from K-Manners. You'd have probably seen that we launched a new product, which is scratch cards, the scratchers. It's doing pretty well. It's obviously trending above budget, and we're expecting some euphoria. We didn't really realize it would have been this huge, and we still have more legs in it because it's not in the key locations that it's supposed to. So we're working on that, and we also have a fintech business that we are expecting great things from. I think later on this year, you're going to see the output of that. There'll be several products coming from that angle. And so what you have a business that, is finally beginning to show its potential. And I close by saying we closed the deal with Carreras, which allowed us access to their points of sales, and I think we got anywhere from 6,000 to 8,000 additional points of sales. So including our 2,000, we now have 10,000 points of sales to distribute our products, our content, etc. And we have just recently started distributing our kiosks, where we'll put a kiosk in very, very small communities. You'll be able to buy all of our lottery products from the kiosk. You'll be able to buy cigarettes, and we have some other manufacturers that we're partnering with that will be able to use their products. And it comes with a solar panel, so you're able to sell phone charge and the whole 9 yards. And so I close by saying I think it's really the people's company, SVL, because we do so much for so many people, and everything we try to do is to uplift the Jamaican customer person, and it has been going very, very well. And along with the team, you will see that we'll be doing a lot more things that, our consumers, which is the average Jamaican, will love.
Excellent. Thanks for that, Mr. Parrott. Well, I like the sound of the number one dividend-paying stock, Carreras, knocking heads together with the number two dividend-paying stock, Supreme Ventures. Mr. Berry, tell us a little bit about one more in your top 10 is Grace Kennedy. I know you went to George's, and I suspect Don Webby went to George's, but I'm sure you didn't buy Grace Kennedy only because of Don. Tell us a little bit about what you expect from GK and how you see that playing into your portfolio and why you were so bullish to be buying it at that time. I mean, at $60, I don't know if I was in love with it at the time, but a year later I see it at $100, and I have to once again pay homage to the guru. But tell us a little bit about GK and how you feel about that stock and keeping it in your portfolio.
Yeah, before I speak about that, I want Gary to talk a little bit about our new game at SVL. How is that going? Scratch and win.
I did. It's performing above budget.
Above budget.
Above budget.
Yeah. So on Grace Kennedy, what I liked about Grace Kennedy, we actually got in below 60. It was I think 50 something. The thing I like about Grace Kennedy is that it's a consumer staple, the food business. You can't really survive without consuming food, and the company has been in recent times refocusing on really moving the needle with food. And I noticed that they're now growing their overseas business quite a lot, and profitably so. And I think that this is a big change in the history of Grace. They have been in food internationally for a long time, but they were never ever really able to hit the numbers on it while making good money. And I may be wrong, but my feeling is that is changing. The size of the international market for the food Caribbean people and Latin people eat is just, very, very large market. And I just see this providing a very solid base for Grace Kennedy to significantly increase its growth over time. So I like Grace Kennedy from that standpoint.
Good deal. And I couldn't help. So we talked about the good. I don't think it's necessarily the bad. So I've noticed some adjustments to your top 10 portfolio, and I've had the question. So one that was in 2020 and was out in 2021. Just curious to know, Lumber Depot. Do you think you sold it too soon? What were your thoughts when you sold down a notable position in Lumber Depot?
Well, for us, Lumber Depot was really too small to move the needle, and we either wanted to blow it up or blow it out. And we were able to do the deal to blow it up, so we just blew it out.
I like it when $120 million stock is not enough for your portfolio, but I can relate. In an $18 billion portfolio, I do agree, 120, 130 million really won't move the needle. Mr. Peart, as asset manager, we see Jamaica coming fully out of the pandemic. We see MJ up to $18.4 billion. I have no doubt that this portfolio is going to cross $20 billion this year. But tell me a little bit about the market in general coming out of the pandemic. We talked about SVL, and you're talking about pent-up demand and a coil that can blow up. How do you feel about the MJ portfolio and the general potential coming out of the pandemic, despite the headwinds of high interest rate, the threat of war, and a few other challenges? But generally, how are you feeling about the stock market, the MJ portfolio, and the potential of it going forward?
Well, I mean, obviously there are a lot of headwinds. There are headwinds that we really have to take into account. We've seen where local interest rates have started to move up because the central bank is fighting inflation, which I agree with. A lot of people don't appreciate the impact that inflation can make on you, and it's better to start early rather than later. We've seen, for example, in the U.S. economy, they started late, and the world is going to feel the hit when the Fed starts rapidly moving interest rates up to deal with inflation. So again, people might say you have SVL as 50% of the portfolio, but that stock throws off so much cash that as you go into a rising interest rate environment, which it seems that we might be going into, that cash mountain that they have generates more interest, and it's very good for a portfolio like MJE. So to have a stock that can give you capital gains as well as dividends is really the place to be. I think how the portfolio is structured now, I think it's perfect for coming out of the pandemic, because each of the companies in the portfolio, you see that pent up demand, and the revenues are just gonna push accordingly. Obviously, we believe, or we expect, or we hope that the increased interest rates will be temporary. So once we see where inflation is back under control, we would expect those interest rates to be tapered, and then put ourselves in position. And as you're aware, higher interest rates leads to lower multiples on PEs, and but in the case of MJE as a potential investor, that's not necessarily a bad thing, because if you look at the EPS of MJE, it's approximately $2.10. So if you use a multiple of 10 times, that's a $21 stock. If you use the market average of 18 times, that's what, 18 times 2, 38, 36, somewhere around there, and the stock is trading at $9.
Yeah.
Right? So the portfolio has significant upside, and once people really truly understand what MJ is about, certainly from a potential investor coming in, there's a lot of upside in the market. Going back to the portfolio, JAMT is a stock that has a lot of export potential. They're also growing locally. So you have the portfolio structured in a way that if you get hit with any of these potential issues, it should be able to not only withstand it, but also continue to grow.
Thanks for that. No, I couldn't agree with you more. And, in this high inflationary environment, folks, this is not the time to be keeping your money in the savings account at the bank.
Correct.
What you need to do is, to the extent you're managing your asset class risk, you need to be looking for good stocks that you can buy that can fight the inflation. And for sure, MG creates a brilliant opportunity when you can buy a stock at $9, which is a 30% discount to its NAV and significantly below the PE potential. And that's the type of deals you need to be looking for. And secondly, these two gentlemen are always looking in the market for great investment opportunities. So by investing in MJE, you get access to these two great gurus and their investment potential. Mr. Berry, one more question for you as pertains to MJE. I see that Jamaica Broilers Group is another big one in your portfolio. I'm seeing a bit of a trend here. You seem to like these big companies that are making 50% of their revenues from overseas, like Grace, and I feel like Broilers is a similar one. But tell us a little bit about broilers, how that fits into your portfolio and where your headspace is in general.
Okay, Dan. Before I do that, I'm going to take two questions from online. The first one is from David Rose. David is asking whether we'll continue to dispose of CCC. You know, David.
What's CCC, sir?
Cement.
Right.
So, David, we don't normally disclose buys ourselves before we do them. As you know, we think that CMEX is a very bad actor. They have abused the minority shareholders, using their majority power to take money out of the company ahead of the shareholders, and robbing the government of tax dollars. They are bad actors, and everybody needs to let them know about that. When saying so, construction is booming, and the main problem I have, the main risk I see to the cement stock price right now is the energy price. I don't know if it will offset against a strong construction sector and the higher interest rates. I really don't know. But I don't think I should be talking about whether I'm selling or not.
Yeah, I agree with that.
So we have another question here from Nigel Cook. Why is JMB, which Mayberry has recommended in more than one way, not in your top 10? So what I would say to you, Nigel, is that one of the things you have to realize is that Mayberry has a research department that's pretty much independent, totally independent of how I invest and how MJE invests. I don't tell them what to write. I don't interfere with what they write. I try to coach them if I see them make mistakes. I say, hey, look into that, look into this may not be correct. But they don't represent the interests and the views of MJE. They are professional people who do research and do their best to keep our investing public informed. Now, we have never spoken about what our investment philosophy is. Well, I can tell you now, I don't even think it's in the annual report, actually. But basically, we look for long-term growth opportunities, and we like to invest in companies where we can help the companies. So usually that means that we can help them with access to financing, or we can, introduce them to people who can be helpful to grow the company. And JMMB doesn't really fit in that category. So it's not in our investment horizon, scope, target list of companies. But I do agree with the research department. It's a really great stock. So not every great stock is going to be in MJE, because that's not, what MJE is about. MJE is about myself, Mark, and Gary's top picks, and our investment style, which is not about picking every good stock. It's about picking certain types of stocks that we think will do well. So I hope that can help you with your answer. Every Michael, I don't know who that is, but that's a strange name. Any considerations of a buyback or heavy dividend to help the market realize the value of MJE? That's not likely at all. I think we definitely won't be doing a buyback, and we're a reluctant payer of dividends. We feel that, the money, cash flows invested. So we use a little leverage to increase the returns on a portfolio, and we actually don't like having leverage. So when the money comes in, we like to use that to cover the leverage. And basically, when you look at the income we have right now, we can pretty much retire most of our debt in a normal 5-year period. And that's the way we like to feel comfortable. So the dividend is definitely not going up.
If I may, the question, I mean, the section, the slide that you showed, the NAV versus the stock price, yeah. And, when I speak to the analysts, their view is that when you take a huge position in a local stock, and because our market is illiquid, if you want to sell, you're going to have to sell at a discount. And that's why there is the differential between the NAV and the stock price. But our experience has been the total opposite. We've never sold at a discount. And one of the things, the local analyst needs to understand, certain companies, when they get to certain sizes, there's nobody in Jamaica or the Caribbean that's coming to buy them. You're going to get a purchaser from outside of Jamaica. Yeah, and I can give you 2 examples. When Heineken made the bid for Red Stripe, I think Red Stripe was trading at $7. They came with a bid of $33. When Lascelles got their bid from Clico, Lascelles was trading somewhere around $90 a share, and the bid came in at $400 and something, right? So if you look on some of the businesses in MJE, not only there shouldn't be a discount to NAV, if you realize that what the local experts, how they value those stocks locally, and if you go outside of Jamaica into developed markets and see the valuations they put on similar companies, you will find that you should be seeing the reverse.
Yeah.
So that's another way on how we manage the portfolio. A lot of the stocks in the portfolio are undervalued relative to where they have them internationally. And once you build these companies to become attractive to these overseas entities, if and when they make a bid, I can guarantee you it's very likely that where we have it on a local exchange, it's going to be very depressed. Yeah, and so I think that's something that our local analysts needs to start to pay some attention to. And I think once you understand the true valuations for a lot of these shares in the portfolio, you will start to appreciate why you should be buying more MJE.
Yeah, I have no doubt that the market's going to correct for that error or anomaly. I really do think it makes no sense for the stock to be trading at such a significant discount.
It's not a bad thing, we can buy more.
No, absolutely.
We can continue to buy more.
So Dan, David Rose has a question for Gary.
Yes.
When did MJE update its accounting policy, and was it a PwC recommendation to account for associates? Also, why not account for lumber as an associate before disposal?
So, David, I know this has been your big question, and I was waiting. I thought it would have been the first question, David. You have disappointed me because for several years you have rightfully been asking these questions. The good news, which is part of the reason for the delay, we changed auditors. Pricewaterhouse has come in. We've done extensive research, extensive analysis, and Pricewaterhouse has agreed that we can value these companies based on their market value. So accounting for associates, as you did, whether by the equity method, etc., is for a different type of business. Because MJE is in the business of buying and selling financial assets, we have the ability to account for them with level 1 pricing, which is through a recognized stock exchange, which is what we have now. So you won't have to ask that question ever again, David. It has been finally answered. Go through the audited financials. It will give you all the reasons from the different IAS, IFRS, all of those letters. And you can finally put your head to rest, my good friend.
David also wants to know whether we'll seek more debt capital to expand the portfolio.
You know, as the chairman indicated, you know, we're not great fans of debt because, you know, you get to sleep at night. This portfolio lost over 40% of its value between March 15th to March 31st, 2020. And while it was a sizable hit, you know, we didn't lose much sleep because you basically had little or no debt, yeah? And that allows you to run the portfolio in a better way or in a different way. We appreciate what debt capital can do. It helps with the return. And I will say this to you, if an opportunity comes, because, you know, Chairman was speaking about JMB a while ago, sometimes you just don't have the resources to buy all the good stocks. So you're going to have to choose, eh? But I say this to you, David, if an opportunity comes down the pike and we think it is a great opportunity, then it's something that we might visit, you know, take on some more debt capital, but it will be short-term in nature in the sense that we take up advantage of the opportunity, but we would certainly look to reduce our debt to equity as quickly as we can.
Thanks for that. And I challenge you folks to go out there and look at if there's any other fund in Jamaica, any of the NAV stocks that can